Welcome back to Pro News Weekly. This week, the markets are rewriting the record books.
The US dollar is losing ground, the S&P 500 has hit a new record high, gold surged, and Bitcoin is stuck in a consolidation phase.
Lots to get through. Let's start with the dollar.
So, the dollar is losing ground on a few fronts. Treasury bond yields have dropped back to where they were before the FOMC meeting. The odds of Fed hikes are shrinking, and inflation expectations are easing as the Middle East conflict de-escalates. There's also pressure from an unusual source. The US is taking part in coordinated currency intervention with Japan. That increases the Fed's balance sheet, which runs counter to tightening.
And there's a familiar trade making a comeback here, isn't there?
There is. The Sell America trade is being revived. The dollar seems like it just can't rise, even against a backdrop of high Treasury yields.
On to equities, and the S&P set a new record after a long pause. There's a nice historical stat here. Over the past 30 years, this has happened 22 times. In more than 70% of those cases, the index was trading higher 6 and 12 months after reaching a new high. So the odds tend to favor the bulls after a breakout like this.
An earnings season gave it a real push, didn't it?
A big one. 86% of reporting companies beat their forecasts. That's the best result in 5 years, and profits rose by 29%. The rotation is also still going. Investors are betting that competition and falling artificial intelligence costs will shift much of the value towards the companies that own the apps and services people use every day, from search and e-commerce to advertising and enterprise software.
Let's move on to gold, which had its best daily gain since February. That came after reports of a provisional deal between Iran and Oman to reopen the Strait of Hormuz. Here's why it matters. Lower oil prices and slowing inflation reduce the chance of further Fed rate hikes. That pulls Treasury yields down, weakens the dollar, and boosts demand for non-yielding assets like gold.
And the big funds are leaning in, aren't they?
They are. TD Securities notes that macro discretionary funds have doubled their bullish gold positions since June. Strong demand for gold-focused Asian exchange-traded funds is supporting the price too.
Over to Bitcoin, which is still consolidating in a narrow range. Volatility is falling, and interest among retail traders is fading. According to Wintermute Research, Bitcoin's share of crypto trading is dropping. The share held by institutional investors has grown from 59% to 72%. That really shows Wall Street becoming the main source of liquidity for the crypto market.
So it's starting to behave more like a mainstream asset.
Exactly. Bitcoin increasingly resembles a traditional asset, and its gradual pullback from record highs doesn't look anything like the crashes we saw in previous crypto winters. So what's the main event this week?
The key one in the second week of August is the U.S. July inflation data. In June, consumer prices slowed to 3.5%, and the core rate fell to 2.6%. If that downward trend continues, the Fed won't need to rush to raise rates. Lower odds of tightening would weigh on the dollar and give stock indices a tailwind. If inflation speeds up instead, it adds hawks to the FOMC and strengthens the greenback.
Anything else on the radar?
Yes, keep an eye on the retail sales figures and the second estimate of US GDP.
That's it for this episode. Stay on top of global market moves with Pro News Weekly.
Like, share, and subscribe, and we'll see you next week.